Hello, welcome to the Philadelphia Money Show. I'm John Dobis from Forbes. Honored to be sitting next to Dennis Gartman. He publishes the Gartman letter. All kinds of commodity stuff.
Yeah.
Smart person in the past year could have picked up some gold for about $1,000 per ounce. And $15.50, where are we now? Something like that? It was up to
it's had a bad break today. I've been bullish with gold for the past several years, and I want to make sure that everybody understands I'm not a gold bug. There are times when one is to be bullish.
What's a gold bug, by the way?
A gold bug is somebody who owns gold all the time, no matter what. On the way down, he owns it. On the way up, he owns it. He's fearful that the United States is going to hell in a handbasket, that the whole thing's going to come crashing down upon our shoulders.
Someday it might.
Someday it might, but anybody who's made that bet has always
been wrong so far.
It's been a bad bet. that may happen.
Well, what's driving then the gold price though from 1,000 to a 50% move is not.
Well,
a small
actually,
move.
what's even more impressive than gold in dollar terms is gold in euro terms. Gold in euro terms is up much more dramatically than is gold in
All
dollar
fiat
terms.
Currencies are losing ground to gold, but
yeah, and well, they should, and especially people think that that the euro should be strong, and my word, it continues to fall. It was what, 114 not too long ago. It was 111. Now it's 109.
We'll hit parity. Don't you think
it's going to parity or lower. It has to, and so I think you want to own gold in the currency that you think is going to depreciate relative to anything else.
Oh, good point.
And if I can buy gold in euro terms, and I think the dollar is going to get strong, why would I spend my dollars to buy gold when I can spend euros to buy gold?
Because you're going to have to convert your euros at some point back to dollars.
No, you don't have to do that. You can do the trade either using futures, or you can do the trade using cash, or you can do the trade using ETFs. You can buy
GLD would do it. Well,
you can buy GLD and then short.
That's in dollars. Then you can short the euro.
And then short the euro. Then you own gold in euro terms. And people think, well, why should I do that? When I tell them, well, you know, if you buy soybeans, for example, what you've really done is you bought beans and you've sold dollars.
Correct.
That's really what you've done. Well, I just want to put one more layer on top of that. I want to buy gold and sell euros, because if you take a look at what the euro has done over the course of the past 6 months, it's moved consistently from the upper left to the lower right on the charts.
Right.
Gold has moved from the lower left to the upper right on the charts. And during intraday, if you own gold in euro terms, you have reduced the amount of intraday and interday volatility. It's the holy grail of trading. You get a bigger return and less volatility. Isn't that what everybody's after? So,
currencies, though, do they move with the underlying interest rate direction of the issuing sovereign?
Theoretically. That's what's driving the dollar right now. That's what's driving the euro down. That's what's driving all of the currencies.
You get a zero yield or negative in Europe. Why not come over to our friendly shores?
Why not come over to our shores? It's that simple, and it's going to continue to be that way. I mean, why would anybody want to put money into Germany? Why would anybody want to put money into sterling, given the political chaos that occurs there? Why would you want to put money into France, into Italy, when you can put money into the United States and earn 300 basis points more? So, therefore, the monetary authorities have no choice in Europe but to be continued expansionary. And if that's the case, owning gold in euro terms is a far better trade than owning gold in dollar terms.
But owning gold in any kind of terms has been a good idea.
Has been a good trade, and
will likely continue to be a good trade in dollar terms, in euro terms.
I must admit, the biggest position I have in my own retirement account, and that's the only person I trade for, is me. It's my several millions at risk, and I have my own money at risk every single day. And I must admit, I'm a little leery. I'm a little concerned about the fact that I've been too long of gold, and it's in the past 48 hours, it's traded like, how do I want to say this, like crap. And it's very disconcerting to me.
Do you ever purchase protective puts of some
all
sort?
the time. Absolutely, all the time.
So you have a hedged position in gold.
I've hedged my position by owning it in euros, but lately, rather than buy puts on gold, I've actually, during periods of weakness, I've been cutting back the size of the trade.
Okay. One thing I wanted to address with you too, earlier from May until July, or April until July, gold had a very good period of time.
Yes, it did.
And so did Bitcoin, almost coincidentally. But that hasn't been the case from about August
Bitcoin is heading to zero.
Why do you think, I don't say I dispute that, but why do you think that?
First of all, there's no value to Bitcoin. It's just what one person is willing to pay it compared to somebody else.
Any currency is worth that.
Well, at least the US dollar is backed by our aircraft carriers, our
ability
tanks.
to protect oil countries.
Yeah, I mean, that's
right,
something.
Sure.
Bitcoin has nothing to protect it. Two, the advent of Libra, which will be
Facebook currency?
The Facebook currency, which will be a cryptocurrency, but it'll be backed by other currencies, and it'll be backed by gold, it'll be backed by copper, will just wipe Bitcoin off the map.
Okay, but it looked like there was a flight to safety thing going on.
There was when I went to 20,000. It made no sense to me whatsoever. I was abjectly disdainful, have been abjectly disdainful, and will continue to be abjectly disdainful of Bitcoin long into the future. When it goes to zero, I will then say I'm no longer abjectly disdainful of it.
A policy of abject
Disrespect.
and distasteful disdainment, I guess would be. All right, what kind of? So gold's had a great run. You're a little nervous now. Any other markets that have been whipped like red-headed stepchildren that might turn out to be functioning adults?
If you could take a look at the grain markets from a longer-term perspective, don't look at a daily chart, but look at the monthly and yearly charts. You got to admit, soybeans at $8.50, wheat at $4.50, look like they've stopped going down and look like they want to start going higher.
How about corn in that same time period? Went to the roof, went to the moon, and then came back down to the Pacific Ocean.
The problem that corn has is that
Mariana's Trench.
Well, the problem that corn has right now is the fact that ethanol supplies are so high in the United States, and 1/3 of the corn crop goes into ethanol.
Grown for that. Okay, good point.
And the ethanol production has peaked, and ethanol inventories, however, are still extremely high. So the propensity for corn usage to go up for ethanol production is relatively minimal.
Unless we start eating a lot of cobs of corn or things like that.
Well, corn had a run in the spring because the crop was being put in very, very late.
And the rainfall. And does China affect any of this? I'm sure it does.
It depends on what they're going to do
timing
with
of their imports.
Well, it depends on what they're going to do with the importation or not importation of pork. That's the real question in China is their pork supplies. They still have a problem with Asian.
Lean hogs have been down a lot this year too, right?
And yes, they have been. And quite honestly, a lot of people thought that because of the problems that China was having with Asia flu, with the pork flu, Asian flu,
swine flu, what do you call it?
Swine flu. Thank you. That pork prices here in the United States would take off, and in fact they didn't, which
not at all.
Caught a lot of people off guard.
Get a cheap pork chop these days. Excellent. So. Gold, one takeaway here, I guess, would be that idea of gold in euro terms.
That's the big thing.
Because unless they start taking...
Now, to show you how stupid I am, I actually had an ETF predicating gold in euro terms. We only got it to $50 million, and there wasn't enough to keep it...
it's gone now? Or?
It's gone. And the company that was running it pulled the trigger on the actual day of the low.
It's usually how it goes,
Which
isn't
is
it?
how it goes. Yeah. I mean, it was just if they had waited another month and a half, they'd have quickly had $200, $300, $400 million.
So to do it now with ETFs, buy the GLD.
Buy GLD.
And then
buy EUO, which is the short. Which is the short.
2x short or 1x short.
It's the 2x short.
2x short. EUO.
So you buy $1 million worth of GLD and you buy $500,000 worth of EUO, and you now have gold in euro terms. Do $100,000 of GLD and $50,000 worth of EUO, and you now have gold in euro terms.
I'm trying to find my phone to do these trades. Dennis, good to talk to you.
John. Good to be here. Thank you for inviting me, and you guys set the. You obviously have a very low bar when you let me on a consistent basis.
Who's this guy? Dennis Gartman, Gartman Letter.